We've seen the toll the coronavirus has taken on the U.S. markets, but other countries have also been hit hard. The widely tracked iShares emerging market ETF is down about 13% this year. Joining us right now on the phone is legendary emerging markets investor Mark Mobius. He's the founding partner of Mobius Capital Partners. And Mark, thank you for taking the time to talk with us today.
It's a pleasure.
The moves we've seen in the markets, do you think it's been an overreaction, an underreaction, or maybe just right to as what we know right now about the coronavirus?
I don't think it's been an overreaction simply because there's so much uncertainty out there. You know, I thought being here in South Africa and before this in Latin America, I'd be safe because there are no announced coronavirus victims. But now we have it here, we have it everywhere. So the uncertainty is definitely a big factor, which causes fear and, of course, causes people to sell out and to go into safe havens like gold or treasuries or something like that.
What have you done?
I've been actually adding. I'm trying to add to our investment trust now. I hope I can get it at the right price. So that's my strategy is to consolidate. In other words, I had some holdings which were not the greatest. Those are the ones to sell, and then add to those that look good. So I feel that this is, in some directions, a buying opportunity. Of course, you can always go in too early. This happened before, but I think it makes sense to put some money in and continue to put in as the markets come down, if they do come down.
When you talk about markets that look good, areas that look good, are those the areas that maybe have already dealt with a big part of the coronavirus and maybe we're seeing them come out the other side? I'm thinking specifically of China.
Well, you know, if you look at the key is oil prices at this stage, that's a big factor. And if you look at the impact of lower oil prices, you've got to be looking at South Korea, at India, at South Africa, here in South Africa, Turkey, Indonesia. These are countries that have 3 to 5% of their GDP into oil imports. So, you know, of course, Saudi Arabia and, Russia are not going to be doing too well in this environment, but there are countries that will benefit. And another factor I think is important to remember is that, the detection of this coronavirus in some of these countries has not been fully utilized. In other words, the number of test kits are not available. And I think one of the reasons why South Korea has such high numbers is that they're doing a very good job in testing people. They have enough test kits, and they're out there testing, many people.
Well, that's an interesting point. And going back to China, we have seen the reported number of cases drop. We've seen them close some of the temporary hospitals they'd set up. But I guess now that they're going back to work, we get the next question in what happens now once you lift some of those severe restrictions.
Exactly. And that's, I know the Chinese authorities are very eager to get production going again because the Chinese manufacturing system is going to be losing market share to other countries around the world. So they're very eager to get going again. And, of course, the next question is whether we're going to see another outbreak, a secondary outbreak. So we have to watch this very carefully.
I guess the thing that really catches my attention that you just said is you're looking at markets where you're not so much factoring in coronavirus as much as you are oil prices. Countries that have 3 to 5% of their GDP in oil inputs that they're bringing in, you're not going to make any bets. You're just going to go to the things that will help.
Exactly. And I think another factor here is the impact of lower oil prices on inflation. This, again, enables the central banks in these countries to lower rates in line with what the U.S. is doing. So I think that's a very important point. And, of course, with lower inflation, you get lower retail prices, which encourages people to buy, and you see a recovery in these economies. It won't happen overnight, but, in the next few months, you probably will see that.
What did the Fed's recent 50 basis point cut mean through the view of what it means for emerging markets, those that you're focused on?
Well, it means a lot. I mean, you pick up a newspaper anywhere in these emerging markets, like here in South Africa, you pick up a newspaper, the headline is, the Fed has done this or done that. So people are watching this very carefully. And, of course, with the big ETF activity in emerging markets as well as developed markets, the correlation between what's happening in the U.S. and the emerging markets increases. So a downturn in the ETF space in the U.S. has an impact on what's happening in emerging markets.
Mark, you said you're buying at this point. When did you start? What was the sell-off that made you think this is enough to start jumping in?
Well, just yesterday.
Just yesterday.
We started, yeah.
You're in South Africa. Are you there for business, or are you there because you were concerned about what was happening in Singapore and other places?
Well, I came here for business first, but then I was planning. I actually had to attend a board meeting in Romania and another talk in Russia in the next few weeks, and I decided to cancel those and stay here, not do much traveling until things begin to quiet down.
So, Mark, after having been active for so long, globally in all these different markets, do you think in a couple of years this will be an instance?
In the past, the difference I think is going to be that the variation will not be as extreme. I remember investing in Argentina and Brazil when inflation was 2,000, 3,000%. So, it's unlikely we're going to see those extremes probably in the future. But at the same time, you're always going to see these ups and downs, these bear markets, these panics, et cetera, But the nature of them will be much different because right now, with the Internet and with incredible communications, things will happen much faster and will spread around the world much quicker.
I guess the question, and none of us can really answer, is it going to be, in hindsight, like a really nasty influenza season, or is it going to be a pandemic akin to something that hasn't happened in a century? And I don't know. We don't really know which it is at this point. And are we able to deal with it better with modern science, modern technology, or does the whole airline issue make us even more susceptible since it spreads so quickly? We don't know any of the answers to these things now, I don't think.
Well, that's really the difference that we have now is that with incredible travel, I mean, I go to these airports, brand new airports in all these emerging markets filled with people. There's definitely going to be a spread of anything that hits any individual country, and it will spread around the world.
Yep.
The difference, of course, this time is that we now have much better health care. We have much better scientific information about these viruses. So I'm quite optimistic that we can conquer that. But as I said, anything that happens is going to happen on a global basis.
Okay.
Hey, Mark, thanks for talking to us today. We hope we can check in with you again soon.